College of the Canyons and the College of the Canyons Foundation. We're really glad that you're here. You know, this is the first of what's going to be many calls with the Chancellor's Circle, and we're considering these virtual business briefings. Many of you have attended business briefings in the University Center for years, and we're pleased to be able to provide some content to you as we go forward in this kind of virtual sense. We are navigating some really unprecedented times in our community and across the world. And I know that what's really helpful is that we can stand together as a community and help one another, even if it's in a distant sense or even remotely. We hope by these calls hosted by the Chancellor's Circle, you're not only be able to find helpful information, but also build a sense of community for you and your fellow business friends and the business community. Many of you have spent decades supporting the College of the Canyons, and we hope that these calls will be, in a small way, a sense of a resource that you can lean back on us and hopefully connect you with more resources in the community. More than anything, though, we want this to be you can share and find resources together. Today, we are excited to feature two incredible business leaders from the community. But before we do that, I'd like to handle a few more announcements. For a call this size, most participants coming on will be automatically muted during the call. And this cuts down on unnecessary noise or interference. But we really do want this to be a place of to be able to ask questions or provide feedback. So here, I want to provide a couple suggestions for you. At the bottom of your screen, you'll see that there's a chat box. Feel free to ask questions, ask away. We're going to be able to share those later, kind of during a question and answer period. And we also would like you to have the opportunity, especially if you're on a phone call, to be able to ask questions as well. You can also, in that chat box, use the raise hand feature. This will just simply tell us that you would like to say something. So maybe you don't want to type out your question, but you want to kind of raise your hand, just like you would in a meeting. Now, with so many people on the call, we may not actually see your video. So if you even waving at us, we may not be able to see you. So go ahead and click that raised hand. If you're on the phone and you'd like to unmute yourself or mute yourself, you just push *6. And if you'd like to use that raised hand function while you're on the phone and not on the internet-based version of Zoom, you can press *9. So *6 if you'd like to mute yourself, and *9 if you'd like to use that raised hand function. One more announcement. Finally, we are really excited to share that next week we'll be having another virtual business briefing hosted by Chancellor's Circle. We're going to be doing this just the same way, but we're going to start at 10 a.m. next week, and we're kind of looking for the right time to have these in the future. Next week's talk will be financial planning for your business in the midst of COVID-19, kind of like a step 2 or phase 2 from today's talk. 10 a.m. Moderated by Nicholas Cardenas, Chancellor's Circle member, also a financial professional, as well as our very own Jill Milady sharing some of the things that she's doing with her business in terms of responding to the environment that we're in. There will be a special presentation made by Mr. T. Meyer, who's a board member of the College Foundation, as well as a Chancellor's Circle member. So that's enough talking for me. You didn't come here to hear from me. I would like to introduce Jill Milady, President of Milady Direct Marketing and Chairwoman of the Chancellor's Circle Steering Committee. She's here to tell us a little bit more about what we can expect in the weeks ahead, and also share a really exciting strategic partnership that we formed this week in terms of these calls. So take it away, Jill. Thank you.
Good morning, everyone. I'm very proud to be here this morning, and I'm really just so happy that you could be with us to share some great programs that Catherine's going to be announcing, and as well as Tamara Gurney from Mission Valley Bank. So thank you, Catherine, and thank you, Tamara, for being here with us this morning. We want to spread the word and get as many businesses involved in our Chancellor's Circle virtual meetings on Fridays at 9 a.m. We have found that some of these programs have been offered in other places, but they change, as Catherine will tell you, pretty much by the hour, by the day. And I know that we have the most relevant information for you as of this morning. I want to announce our strategic partnership this morning with the Valley Industry Association, VIA. VIA has been helping businesses for 35 years here in Santa Clarita Valley, and the Chancellor Circle virtual briefings align with their strategic goals, and we have asked them to become a partner with the Chancellor Circle to offer these virtual briefings to their membership. So they graciously accepted, and they will be our partner going forward. So we're really proud that Hillary Broadwater, the chairwoman of VIA, and Kathy Norris, the president CEO of VIA, is here with us this morning and have asked their membership to join in on our virtual briefing. So thank you very much, VIA, for helping us, for being here this morning, and we look forward to a wonderful partnership. I appreciate the Chancellor Circle members for being here as well, and I know that this will be very valuable to you. If at any time you would like to talk to me to know what I'm doing for my business, please reach out to me. I'm happy to help. And I'm just so thankful to Dr. Van Hook for having this idea of engaging with our Chancellor Circle members, our Foundation Board members, and our community businesses to provide this great opportunity for us to learn more about what's going on. I wish you all the best of luck. I hope you can survive during this pandemic. And again, let us know how we can help you. That's what we're here for. So I'll pass it back to James, and we'll have a great meeting. James? He's on mute.
Sorry about that, guys. All right, thank you, Jill. Can you hear me? Okay.
Yes.
All right, yeah. Let's kick this off. I would like to introduce Catherine Grooms. We're very fortunate to have Catherine not only at the college and in our community, but on the call today. Catherine is the director of the Small Business Development Center, hosted by the College of the Canyons. And Catherine does really amazing work supporting business owners, and the SBDC is clearly one of the most valuable assets to our local businesses here in our valley. She's here to tell us more about the programs that we mentioned and how these assist businesses. And so I'd like to welcome Catherine Grooms.
Thank you, James. Thanks for having me this morning. Glad to be a part of this, and it is a critical time for everybody. As Jill said, we're in survival mode, working towards sustainability and then being able to move beyond that. So critical time. Just a little bit more about the SBDC. So I am the director of the SBDC. I have a team of 20 professional business advisors, and we're actually part of the SBA. We're an SBA technical resource partner, which means we are actively working with business owners and entrepreneurs that want to have an impact on the economy, which we know is critical, a critical driver in the local economy and the national economy. And it's even more evident now than maybe before for some people, but I'm sure everybody on the call is clear on the impact of small to medium businesses on the local and the national economy. Our primary mission is one-on-one professional business advising. There's no cost to work with us. I mentioned the SBA. They're a sponsor. College of the Canyons is our host, and they're a sponsor too. So everyone that is a part of my SBDC team is actually an employee of College of the Canyons. We also have the state of California, cities in the geographical area that we cover, and other entities that sponsor us. And that's how we are able to work with businesses on a regular basis. So we're a confidential resource you can use. Absolutely, we are focused on disaster assistance now, being impacted by the coronavirus, and previously. So we've always had disaster assistance as expertise on our team. And in addition to that, this is where we're talking about sustainability and beyond. We work with clients on strategic planning, business modeling, accessing capital, sales and marketing, public relations, finance, accounting, management, strategy, and operations. And we're very accessible. We work throughout the Santa Clarita Valley, San Fernando Valley, and the Antelope Valley. We also meet via phone and virtually, so we're very accessible, regular business hours, early in the morning, evenings, and weekends. And in the current climate, it's absolutely critical being accessible when clients need to reach you. So what I'm going to do is I will start with the SBA disaster loan, also called EIDL or EIDL. And the SBA is the direct lender for the SBA disaster loan in EIDL. They stopped accepting applications on Thursdays, but I want to let you know that if you applied for the EIDL or the SBA disaster loan, if you take a look at your confirmation number, you should be looking for the first digit to begin with a 3. And there is a way for you to check the status of that. So the SBA is the direct lender. They are working to help as many businesses as they can remain sustainable in the coronavirus environment. So sustainability is key. There is an advanced feature with the EIDL, and there are those advances that are actually being deposited into accounts. So be aware of that. It is $1,000 per employee as of January 31st, 2020, in case you applied for that. The balance of the SBA disaster loan, meaning the amount that the SBA came back to you and presented, they made an offer to you to help the business remain sustainable. You're subtracting the advance amount from that because it doesn't have to be repaid. The balance is payable over 30 years. There's a 3.75% interest rate. There is no prepayment penalty, and the first payment is due in a year. So again, a source to help keep the business sustainable. Look for the confirmation number. It should start with a 3, and the 3 signifies when they went to the streamlined application process. And I'm going to actually give you the customer service number. It is 800-659-2955. Again, that is 800-659-2955. It's staffed 7 days a week from 8 a.m. in the morning till 8 p.m. at night. This is Eastern Standard Time. Know that there are a lot of people trying to get through, so don't get discouraged. Try to pick an off time in consideration of the Eastern Standard Time. So that's one way you can get through. There is also an email that you may receive from the SBA where they're inviting you to create an account for the SBA Rapid Relief Loan Portal account. So this is a mechanism in place to allow you to set up
Catherine, we've lost your audio. Can you hear us? Can you hear us now? Can you hear us?
Okay, I'm back. Sorry about that.
Yeah, no problem.
Okay, with all the technology going on, there are some challenges sometimes. So sorry about that.
Absolutely.
Okay, so I gave the 800 number, and then if you receive an email from the SBA, they'll invite you to create an account for the SBA Rapid Relief Loan Portal, and then you can go in and you can check electronically for the status of the advance and or the loan amount through the SBA. Again, the SBA is a direct lender on that one. For the Paycheck Protection Program, Tamara, I'm not going to steal your thunder on that. I'm just going to highlight what they can do. So if you have applied for the Paycheck Protection Program, meaning you went through your primary business bank, who is an approved lender, or you went through another SBA approved lender that was accepting non-customers, or you went through an SBA approved non-bank. So they're the actual lenders for the Paycheck Protection Program. You should reach out to them. They will be able to tell you the status of your application. So I'm not aware of any additional applications being processed right now, although lenders may be accepting that information. But again, check with them for the status and your next steps. But I'm sure Tamara will have more to say on that. I want to give you some options just in case you were not approved for the PPP or you did not apply for the PPP. Consider asking your CPA about this. You can look it up on irs.gov. There is the Employee Retention Tax Credit, which is refundable, and it's up to 50% of $10,000 in wages paid. That's for businesses that are impacted by the coronavirus. Again, that's called the Employee Retention Tax Credit. Another option that you may want to think about is requesting delay of payment for your employer payroll taxes for 2020. For that option, the first payment will be due at the end of 2021. The second payment will be due at the end of 2022. Again, you can go to irs.gov and look for that. These are options if you are not approved for the PPP or you did not apply for the PPP. Something else for you to consider is if you have an SBA loan under the CARES Act, there is a 6-month loan payment forgiveness. If you have not thought about that, I'm suggesting that you explore that. If you do have automatic payments set up for that SBA loan, you have to stop the automatic payment. So again, this speaks to cash flow. I'm also suggesting that if you have not taken a look at and reviewed your business creditors, suppliers, vendors, look at who you have to continue to work with from a business operating perspective. Think about prioritizing those items. You know, are there some that may not have as high a priority given the environment that we're in? If you're an essential business, quite a different scenario than others that may not be classified as essential. But cash flow is a major consideration, and it's critical for survival and for sustainability and beyond. So if you have not reached out to those business creditors, suppliers, vendors, I'm suggesting that you think about reaching out to them to let them know that you are being impacted by the coronavirus. They may have options in place, they may not, but there's no harm in reaching out. I'm also suggesting that if you're making phone calls to take care of that activity, that you follow it up with an email so that you're clear on when you're reaching out, what you're talking about. And there's so much going on in this environment. You just want to be aware of all the steps that you're taking. For some of you that have employees, you may have employees that are eligible for options under EDD. And for you being aware as an employer and being aware for your employees, critical to access the information through edd.ca.gov. Again, that's edd.ca.gov. And there will be the pandemic unemployment assistance available via online application starting April 28th. But if you visit the EDD website right now, the eligibility requirements are posted. So I'm suggesting that in case you need to access the pandemic unemployment assistance, business owners, others affected, visit the EDD website. The information is posted. It's pandemic unemployment assistance, and that is the federal piece under the CARES Act, but EDD will not be able to accept applications until April 28th. Now, I want you to think about the SBDC as a resource. We are always here to work with you. I mean, at some point, once you get out of survival mode and you're in the sustainability mindset environment, you may want to explore some opportunities, in your business. Maybe it's the time to think about your business model. Maybe you have some innovation that's been sparked during this time, or maybe just a project that you've always wanted to work on that will allow your business to move forward. You may want to integrate some of what you've had to do in this environment into how you operate going forward. So I'm going to give you our website in case you know somebody that can use us as a resource. It's www.cocsbdc.org. Again, that's www.cocsbdc.org. If you have something that you'd like to reach out to me personally with, absolutely email me. My email is Catherine.Grooms. So it's Catherine, CATHERINE .GROOMS@canyons.edu. And remember, what we talk about with our clients is confidential. So it's a safe space for you to talk through whatever you would like to. And thank you so much, James, for allowing me to participate.
Thank you, Catherine. I really appreciate that update. And thank you for a few of the questions that have already come in. We're going to be taking those right after we have a chat with Tamara here. So continue to send those in, and we'll be looking at those. I'm pleased to introduce a longtime COC Foundation board member, as well as president, CEO, and founder of Mission Valley Bank. Tamara Gurney is on our call today. I know from personal experience talking to local business owners that Tamara's on the front lines of helping clients, not only with the PPP, but also with a lot of other important issues and issues that business owners are dealing with. So welcome, Tamara, and I look forward to hearing from you.
Thank you, James, and thank you, Catherine. That was great information, I think very useful and helpful to the people on the call. I'm going to focus my comments today specifically on the Paycheck Protection Program. That's what we've been dealing with over the last several weeks, and it's been an interesting journey. I think a lot of people are confused because the SBA has, like everyone, this has been something that's been put in place in this emergency and a crisis scenario. And when you think you've given complete information, then people start asking questions and you realize you've got to update your guidance. So unfortunately, the night PPP, as it's the acronym now, it came out and launched on April the 3rd on a Friday, and Thursday night we got new guidance. And then the following Monday morning, guidance was updated again, which changed a lot of things. For example, initially, independent contractors could be included for small businesses who issued 1099 to independent contractors they used. And so they were including that in their calculation for payroll. And then Monday, we found out that independent contractors were carved out and they had to apply on their own. So some people that rushed to get an application in had to redo that. So this is just giving you an example of some of the issues that have come up that have caused a certain amount of frustration. But stepping back from it, we're in unprecedented times, and there's a lot of emotion and stress and fear, and all of those things cause people to react differently than they might normally do. And so you have to deal with that and sort of navigate. People are rushing in to try to get these loans done as quickly as possible, and we're trying to be thoughtful in helping them think through what the best approach is. So Catherine mentioned the Economic Injury Disaster Loan Program, which is the EIDL, that is done directly through the SBA. And my understanding is that if you applied for funding under that program up to the date that the PPP was launched on April 3rd, you could get those funds and then also apply for PPP and ultimately roll some of that EIDL money into the PPP to try to get forgiveness for a portion of that. So there's some guidelines and rules relating to that. I know some people did get that funding and are rolling it into the PPP program. I think it was mentioned that yesterday the $349 billion that was allocated under the CARES Act was completely exhausted. The SBA put out the announcement that the fund is closed. They're no longer accepting applications, and they will not hold a queue. So if you were one of those individuals that got an application in, the day before, say on a Wednesday, and it was being processed by the bank, but it hadn't gotten into the E-Trans system to get an SBA loan number, you're not in a queue. The SBA will not hold applications for the potential of new funding opening up. There is a lot of discussion and more of a sense of urgency now with Congress looking at appropriating some additional funds. It's been discussed for probably well over a week, but until the fund ran out, the sense of urgency doesn't appear to be as great in the congressional leadership. But now there's a lot of pressure because so many people that were trying to get that funding were not able to. So we feel pretty confident that there will be additional appropriations for it. It's uncertain how long that will take to come online. So people are encouraged to continue to prepare their application and get their documentation together so that they can submit that as soon as that fund opens up again. So in terms of how the program works, essentially what we're telling people is please focus on the fact of what it's called. And the very first word is the driver. It's paycheck protection. So the obvious thing is the idea is to keep people employed. So when this crisis came about and businesses were shut down, many were forced to lay off people, and many of those people got on unemployment. And so the thing that we're doing is trying to encourage taking these funds to be able to hire back people, and they can keep their jobs and have their paycheck. But we have to be very thoughtful about the timing of that, because there are some businesses that are completely shuttered, like hotels, restaurants, gyms. They're completely closed. So some restaurants were able to maintain some employees because they converted their businesses into takeout and delivery. And so they could convert maybe a server or a hostess to be a delivery person or handle the takeout side. But most of them had to let go of quite a number of employees. So the uncertainty is we don't know when this is going to be over. Right now we're in these shelter in place or safer at home until May 15th. We're hoping, all of us are hoping, that we can get back to work by that date. Some are hoping even earlier, but we just don't know. And since it got pushed from April 30th to May 15th, we have to think that there's a likelihood, a potential anyway, that it could go to the end of May. And so we're trying to navigate what's the best program to take advantage of. For example, if you are a gym and you're completely shuttered and you take the Paycheck Protection Program so that you can pay all of your employees, you have 8 weeks to disperse that money from the date that you receive it. So that's 2 months of salary. If you got your funding before the end of April, you can pay your employees for May and June. But if you're not able to open until after June, then you're back to kind of square one again, and we don't know what programs might evolve in the future that might assist you. So it's taking some time, but we think it's important to spend time with business owners to talk them through this and help them determine the best timing to apply for the funding so that it can be put to its best use. In my gym example, I explained to a business owner that most of his employees are making $55,000 a year or less, And those individuals would probably be better served to stay on unemployment, because with the enhancements to unemployment in California, here in LA, we're getting another $600 a week. Most of them are getting 100% of their salary on unemployment. So you may want to consider, let's not bring those people back on payroll in the event we don't get open in June and I have to lay them off again and put them back on unemployment. So, it's kind of a tricky thing to navigate. So I will kind of go back to the beginning in terms of the program. The small business owners, nonprofits, et cetera, sole proprietorship, self-employed, independent contractors, those are the groups, and there are some additional that can apply. And the calculation has confused some people, but essentially, if you've been in business during 2019, all of 2019, you would take your 12 months of payroll and you would divide it by 12 to come up with your average monthly payroll expense. And then there's a cap at $100,000. So if you have employees that make cash compensation, which includes base salary plus any cash bonus or incentive pay, you can include them in this calculation, but you have to cap it at the $100,000 mark. On top of that, though, you can also include your healthcare benefits and 401k contributions, and those things of that nature can be added for that individual who's capped at 100. So this is where the calculation comes in, and if you use a payroll service, it's a lot easier because that's information is very easy to capture. But for a lot of small business owners, they're having to do the math, and we're having to validate that they're correct to make sure that they're asking for the right amount. So they're coming up to a number of how much, that's the loan amount. So when they come up with a total of what their average monthly payroll is, that includes all of those components, they multiply that times 2.5, and that's the loan amount. Where the confusion has come in is there are other approvable expenses that can be covered for the use of the PPP proceeds. And that would be rent, mortgage interest, not your principal, but mortgage interest, utilities, and some debt that might have been incurred prior to the PPP program that can be used for those funds. The 2.5 times is important to think about, because what people are doing are adding some of that rent and utilities and mortgage into the number that they got from the payroll side. And that's not how it works. Your loan amount is 2.5 times your average monthly payroll expense. The 2.5 times means you have 8 weeks to use that money. From the date you receive the funds, the clock starts ticking. You have 8 weeks to use it all. So 8 weeks is the 2 months. So that's 2 months of payroll. And now you have another half of a month of money in another bucket. That's the money that you would then use for your rent and your utilities and mortgage. It's really important in terms of the forgiveness, because there's also a lot of confusion there. Many people think that the PPP is 100% forgivable. And while that could be technically true, if you don't follow the guidance, it might not be true. So the thing to remember here is that 75% is the minimum amount that you must spend those funds on payroll. And 25% is the maximum amount that you can spend on the other approvable expenses. So for example, if you receive $100,000 in PPP funding, $75,000 is the minimum amount that must be spent on payroll expenses. $25,000 is the maximum amount that you can spend on other approvable expenses. So in another example, if you received $100,000 and you spent $50,000 on payroll and $50,000 on other expenses, you would have forgiveness for $50,000, but you would have a loan. You would have to pay back the other $50,000, and that has to be paid back over a 2-year period at 1% interest, and there's a 6-month deferral of that payment. So in 18 months, you have to have the cash flow in your business to retire that debt, pay back that $50,000 over that period of time. So this is another area where we're trying to spend some time with our business owners to explain, be very thoughtful about your calculation and what you want to put in here, because you could end up with a very sizable amount of money that isn't forgivable. And will your business cash flow when it does get open to retire that debt and pay that bank loan back? The part that's hard to navigate is none of us know. If we open for business in May, that would be great. But personally, I don't believe that as soon as we're told that businesses are open, I don't think everything's going to open all at once. I think it will be gradual. And the other part is, how many of you that have a gym membership, the day that we're told gyms are open, are going to go to the gym? We're still talking about physical social distancing. We're still talking about all of these things that we're having to do now to protect each other from the spread of the virus. And those will have to be incorporated into restaurants, into gyms, into hotels, and it's going to be somewhat of a challenge. I suspect people will decide to stay away from some of those places like gyms and restaurants, and we will have been in this environment of safer at home for more than 2 months by the time this ends. And from everything I read, that's more than long enough to develop new habits. So we are going to have habits created of how we behave and interact with one another that will carry through into whatever the new normal is when businesses open up. So, that's what we're all trying to deal with. And the bankers are not the experts, even the SBA. We're all sort of creating this and, in a sense, making it up as we go along. When there's not a clear answer, we're trying to navigate and be thoughtful with what common sense is. And then sometimes the guidance changes and they make it more clear, and how we looked at it or how a borrower looked at it isn't what is actually now the new guidance. So a lot of confusion, a lot of fear and anxiety, and we're just encouraging people to take a deep breath. We're not going to be doing this forever, and we'll get through it. So those are kind of the basics on the PPP program, what our experience has been. One of the other pieces that's been confusing for some people are self-employed individuals. If you are self-employed and you don't have any employees, you simply take your Schedule C, line 31, what's your net income, that's your number. And that you do then the same math to apply for a loan. You don't have any add backs, but if you're self-employed and you actually do have some employees, then you have the ability to add back some of those things that are approvable on the payroll side, like if you're making a contribution to a 401k or something of that nature, your health insurance coverage, those things can be added back. But if it's just you, they're only allowing Schedule C, line 31, so for net income. So I think in terms of time, and there's probably some questions, I will go ahead and hand it back to you, James, and we'll go from there.
Thank you, Tamara. Yeah, thank you for the many questions that are coming in. We really appreciate Catherine and Tamara spending some time and going through these items. We're going to try to get to as many as possible. Tamara, I'm going to start with a couple that have been directed to you specifically. Michael Fleming asked, I applied for the PPP through another institution, and I received and signed the application through DocuSign 2 days ago. He's wondering, what are the chances of funding at this point, in your opinion?
If Michael received a note from the institution that he applied with, that would indicate that they have put it through the SBA system and have an SBA loan number. So E-Trans is where you go through the portal, you go through to get a loan number assigned. When a loan number is assigned by SBA, that means the guarantee is associated with it and the funds are allocated to it, which is why they've said the $349 billion is exhausted. It's not all in everyone's bank account yet. It's been allocated to those loan numbers. So if Michael has signed a note that he received through DocuSign, then the next step is for that bank to then board that loan on, if it's a bank or whatever institution it is, board that loan on their system, and then the funds should be put in his account. So he's as I'm understanding the question, he's at the final leg of the journey and he should receive his funding very quickly.
Okay. Very good. Jill is also asking, would you consider as a lender equipment loans as a mortgage loan, even though it is for equipment?
Would you, I'm sorry, I didn't hear the question.
Would you consider an equipment loan as a mortgage, even though it's for equipment specifically?
No, we would not. The SBA has been very, very clear on their concern about fraud in this program. And so we caution people to be very careful and look at the guidelines very strictly. We've had people say, well, utilities would be my internet bill and my cell phone bill, because those are utilities. But we're telling people to focus in on, electricity, water, those kinds of things as the core, what utilities would typically be described as, because we don't want anyone to be in jeopardy of having any portion of those loan proceeds not forgiven. And I will say, the inducement for banks and others who are approvable lenders to get into the program is if the borrowers read their application they're signing, and I certainly hope they do, they certify that all of their information is correct. And the SBA is clearly said they're holding the lenders harmless. If there's any fraud, it goes back to the borrower. The bank is not even required to evaluate the package that's sent to them. But most banks and lenders are being very prudent about asking for documentation to support the numbers to protect the borrower and the bank, even though it's very clear that if there is any fraud, it's back on the borrower. And the penalties are pretty scary. And so we tell people this is not something to play with. There's monetary fines and there's prison time to defraud the government in these loans.
Okay, thank you. I'm going to pose a question to both of you. Perhaps, Catherine, if you can start first. I've got a question from David Green, as well as kind of combine this with Joe Clacco. David is asking kind of now that he's been approved for both PPP and EIDL programs, what are kind of best practices and recommendations for small businesses going forward? And he says, at this point, though I'm not sure whether or not to take the EIDL at all, to take a reduced amount, or maybe take it at all, let it sit in the bank as a backup. I've heard other round of funding is maybe approved, and how that affects his decision. Joe also mentioned that the PPP is exhausted, and Catherine, I know you mentioned there's a tax credit from a federal standpoint, but are there any other state or county programs that you'd like to maybe mention, or to kind of, or any other comments toward David's or Joe's question? Oh, we can't hear you, Catherine. Are you muted? Just a second. Are you there? All right, I'm gonna see if she can come back.
Okay.
Are you there?
Yeah. Oh, this is
Okay.
Tamara. Sorry.
Okay, go ahead, Tamara. Yeah.
Yeah. I think you have to be very careful. First of all, distinguishing that the idle funds it is a loan, and it's repayable over. I've heard 10 years and I've heard 30 years, and I think there's criteria that differentiate how long the amortization is. But in any event, and it's at a very favorable interest rate, but it still has to be paid back. So if you spend those idle funds on, your rent and things, utilities, and paying other debt, then you receive PPP funding, and you can use idle for payroll as well. So maybe you're making your payroll in March and in April with idle funds you already received, and you get PPP funding. You just have to be very careful. You cannot use the idle money on payroll and overlap into the PPP. So you need to keep really good records that you used idle money for, March payroll, but your April, May, or whatever, future payroll is going to be paid out of the PPP. there have been some programs, and people probably heard about them. There was a Goldman Sachs program came out.
This meeting is being recorded.
There you are.
On hold by the host. You cannot listen or talk. You are muted. You can mute or unmute yourself.
Okay. There was a program yesterday. I think it came out, launched at 1 o'clock, and I think by 1:15 it had already been exhausted. Yeah. So LA has come up with a number of programs, and they're out. I know the LA EDC has some great information on their website, as does the SCV EDC. Most of these organizations are putting out a lot of good information on the various programs, not just the SBA ones, but the things that the county and the city are coming out with. So I don't know, Catherine, if we can hear you now, if you want to jump in.
Can you hear me now?
Yes, good to go.
Okay, sorry about that. So what I started to say, is absolutely it comes down to cash flow, and with EIDL, there's a 30-year payment period. But like Tamara was saying, if you isolate it to PPP, think about that one as primarily payroll costs, and you have to be clear in how you're documenting your spending, because you have to go back to the lender to substantiate the spending in that 8-week period once the point the loan is received. But there's no harm in accepting the EIDL from the SBA, because you're using that money as non-payroll related to help sustain the business. And again, you're going to take a step back as a business owner, and you'll look at how your cash flow is coming in, how you can work to keep the business around, whether it's fully employed employees or less than fully employed employees. The goal is to stay around as a business. And for me, I'm very cautious when it comes to new programs that are coming out, because the demand is so high now. There's demand from every direction. There is a cap, absolutely, financially, but also on the technology side, it's limited. For some, it's been the first 150 or the first 250. So there's an automatic cutoff, and I would rather have businesses with the opportunity to manage the cash that they have access to so that they can move forward short-term, longer-term, and be around as a business. So cash flow management, if you're not working with your accountant, CPA, accounting department, I'm suggesting that you do that and you prioritize, reprioritize, because we have daily changes, hourly changes in the landscape, and we don't know when we're going to resume activity. And Tamara, I agree with what you said. May 15th is the day now, but I have to imagine that we're going to continue to see the impacts of the coronavirus in our environments, personally, business-wise, and I'm hoping that businesses get back sooner rather than later, but I think it's going to take some time to gradually build that momentum.
Thank you. There was a follow-up question, kind of the time period of PPP. If some of the loan is not used within that 8-week period, can any of that money be used to prepay rent or payroll after that period?
There's no clear guidance on that in terms of prepaying. I've had people ask if they can prepay their rent, for the remainder of the year. The one problem right out the chute is look at your calculation. If doing that is going to cause it to be higher than 25% of the total loan amount, it's not forgiven. At that point, you have to ask yourself if, would I go ahead and do that and know that I'm going to have a loan? Or should I just go ahead at the end of the period, the 8 weeks is up and I'm either going to get 100% forgiveness or I have a loan. I would just essentially pay it back to the bank and just give the money back. But if you can debt service, as Catherine said, cash flow is everything. And if you have the ability to cash flow that loan for 18 months at 1%, that might make more sense for you.
Thank you. We have just a few minutes left. I think we've addressed most of the questions. Thank you for many that have sent them through. We may have a couple minutes to address it. We have a hard stop at 10 as our presenters have other obligations. But Jill, I wanted to make sure I give you a little bit more time if you would like to add anything. I know Jill also had some things that she wanted to clarify, but there's a lot of great friends of the college and the foundation on our call today. And if anyone else would like to speak up, again, they can message me and I'll unmute you, or you can unmute yourself. But Jill, is there anything else you would like to add?
I just want to say thank you to everyone for being here today. And Tamara and Catherine, what you gave to us this morning is priceless. I mean, to have access to you is just so incredible for our business owners. And just want to thank you from the bottom of our heart. I did send a text to Dr. Van Hook just to let her know how wonderful this was going. And she is just completely, just so thrilled. I just want you all to know how much she appreciates you for your support. And she wishes you the best in everything. And if there's anything that the Chancellor Circle can do to help you, please reach out to us as well. And thank you again, Tamara and Catherine.
Thank you.
You're welcome.
Yes, thank you both. We did put Catherine's contact information in the chat. A couple of you were asking as far as how to follow up with the Small Business Development Center. So we're happy to do that. And please contact me or the foundation if you have any follow-up questions. Please plan to join us next Friday. You'll be getting an email invitation if you're on this registration or you're on our Chancellor Circle mailing list to begin with for next Friday. But mark your calendar for another Zoom call. Financial planning in the midst of the COVID-19 crisis, starting at 10 a.m. And I just wanted to say thank you again to both you, Catherine and Tamara, and thank you for our Chancellor Circle members for hanging in there with us and not only supporting our foundation and the success of our students, but each other and the local business community. So that concludes our call. We look forward to speaking with you further and staying connected in the weeks ahead. So thank you very much.
Thank you.
Thank you.